Well, good morning, everybody. Appreciate you all getting on today for our Connecting with Capital. And again, we are the San Diego Imperial Small Business Development Center. We are, of course, a resource partner owned, funded by the U.S. Small Business Administration, also a partner of the State of California Governor's Office of Business and Economic Development, and funded by them as well to provide small business assistance. We not just during COVID, which of course has been very, very active, but we've been around for over 30 years, and of course we'll continue on in as well as being really the advocate and the assistance provider for small businesses. So today we have our monthly Connecting with Capital. This is always a great opportunity to check in with all of our fantastic lending community here in San Diego. And what it really does show is that there are so many great lenders that are out there and different options for small businesses. And this is to kind of get you some familiarity with the variety of options out there as small business owners, and really to be able to understand what those opportunities particularly are. So we're going to start out. We're just going to kind of go around and let you each introduce yourself and your organization, and then we'll get into some of the Q&A. Why don't we go ahead and why don't we start with you, DeWitt?
All right, thank you, Daniel. I'm DeWitt Dudley with Pacific Premier Bank. We're a large regional bank. We're ranked as one of the best business banks in the country by Forbes and a number of other organizations. We focus on commercial banking, real estate banking, a number of other divisions. The types of clients we work with, it could be small businesses, medium-sized businesses to large businesses. By revenue, that could be anywhere from, on the smaller side, maybe 500,000 in revenue, all the way up to businesses that do $250 million in revenue. Loan-wise, we do loans, lines of credit, term financing, real estate, you name it. From the smaller side, maybe starting out at a 50,000 loan or line of credit, all the way up to $100 million credit facilities. The types of credit, it could be credit scored types of credit. In other words, credit products that focus on what the borrower's credit score is, and other products that are fully underwritten. We're not currently doing any PPP lending. We didn't participate in the last round. We were a big driver in the first round. But right now we're really focused on doing a lot of lending, and the bank is aggressively lending right now. And that's it for me.
All right, thanks, DeWitt. And what about you, Drew? And I think you've also got Emilio there with you. Oh, you're on mute, Drew. Drew, you're on mute.
I first want to thank you all for having us, and I'm going to have Justin Wheeler. Emilio and I are with Taycor Financial. We've been established for now 20 plus years as a private lender. But Justin, do you want to share a little bit more details as to where Taycor's niche is, please?
Yeah, absolutely. And again, so excited to be here. Such a great group, and we love the organization, obviously, here in the greater San Diego area. So Taycor Financial, we've been in business 20 plus years. We focus on a technology-oriented approach, both from an application perspective and from a lender perspective, just in terms of how we interact with our various partners. We're a bit of a hybrid. We're a direct lender with our own balance sheet and money to lend, but we also do syndicate out to lending partners just based on the specifics of a particular application that may come through. We do participate in numerous of the government disaster relief programs related to COVID-19. And we really encourage our borrowers to not only look at those as lending opportunities, but also to think about other lending avenues that may make sense for your business post a PPP or PPP2 type loan. What makes sense for your business over the next few years, whether that's working capital, doing something through equipment financing. And so Taycor is trying to expand our overall lending product set to meet what business owners are going to need, not just getting through COVID, but in the 2 to 5 year post-COVID recovery and growth opportunity phase. So again, very excited to be here and really happy to have been included in this group.
Awesome. Thank you all thank you for coming on and introducing. It's fun to have some new lenders as well. So why don't we go to you, Janelle, and what's going on, and introduce yourself and your organization.
Oh, sure. Sure. I'm Janelle Shalou. I'm a business relationship manager here at Chase Bank. Chase is the largest bank in the United States. We have been actively pursuing the PPP loans in the second round. In fact, we had ceased lending on any other loans except for the PPP. We just reinstated lending, so we're back to lending and also helping our clients with the PPP loan, the second round. If you are interested in the PPP loan, I would suggest applying if you haven't done it. It has been extended to May 31st, but we want to make sure that everybody out there that has the opportunity and can qualify, does receive the PPP loan funding. Our niche is traditional banks, so we do have a smaller box than some alternative lenders, but what we do well. The smallest loan we can do is 10,000 line of credit. We can go up to in my group up to 10 million. We do have the credit facilities to go much higher depending on the business size and revenue. We do all types of lending, equipment, lines of credit, term loans, real estate. And then, as I said, we are really competitive with our pricing. We do have a smaller box, but we do what we do well. So that's our spiel.
Fantastic. Thanks, Janelle. And what about you, Fernando?
Yeah, thank you. Fernando Ponce with Primary Funding. We've been based out of San Diego here for about 27 years now. We're really a lot more niche. We really try to work with a lot of the lenders that are here on this panel today. If they, for whatever reason, are unable to approve a loan, due to credit issues, cash flow issues, collateral issues, you name it. I mean, that's where we really come in. We're going to try to provide financing on a short-term basis, either through some type of invoice financing, PO financing, maybe even some inventory or supply chain finance. But really, we consider ourselves a bridge back to the bank or to traditional lending. So if you don't qualify because you've had some issues, maybe during COVID, and the bank's unable to provide capital at this time, we'll partner with you. We'll see what we can do as far as putting that capital injection into your business, so you can start to grow that business again, and then eventually transition you back over to a traditional lender. So again, Fernando Ponce with Primary Funding. Thank you for having me.
Awesome. Thanks, Fernando. And what about you, Tariq?
Hey, good morning, everybody. Yeah, so I work, my name is Tariq Kahadi. I work for US Bank. So my role is quite different to the traditional banks. I actually don't work with US Bank customers. So I basically go out to the market and help non-US Bank clients with banking services, financing, that kind of stuff. We obviously have been very, very active with the PPP loans. I believe we were the only bank across the US that actually helped non-US Bank customers. So through wave 1 and wave 2, we are obviously still open, to one of my peers on this call. Obviously, it has been extended until the end of May, so that we're proactively assisting people. Obviously, we've stopped the loan forgiveness for now, but very much within our space. If we're unable to assist a client with financing, then obviously one of my peers on the line, Miriam, she's my kind of go-to girl. So I'll send, obviously with the authorization of the client. If we can't do it, then I'll make an introduction to Miriam, and Miriam does a wonderful job of taking care of that client.
Awesome. Thanks, Tariq. And that's a fantastic segue, because I was going to call on Miriam next anyway.
Yeah, so my name is Miriam, and I'm with CDC Small Business Finance, and we have been around for 40 plus years. We're mission oriented, and we are here to help you, as Tariq said, when you don't quite fit at a bank yet. So we have very reasonable rates and terms. We have different loan programs up to $250,000. And so, yeah, that's what we're about. We're mission oriented. If you're not quite ready for the bank, then and a lot of times we have a lot of startups especially right now in the environment, the banks that are lending, they're really not open to startups. So believe it or not, we're still doing startups. So 50% of our loans are startups or acquisitions, or even expansions. So yeah, I'm here to help and hopefully graduate them to someone like Tariq or Janelle or Melissa. So yeah.
Fantastic. And Renee.
Good morning. I'm Renee with Comerica Bank. Comerica has been around for over 170 years, and we actually lend in 5 states. We have been lending through all of COVID with no changes in our underwriting. We are also part of PPP 1.0, 2.0, and forgiveness. And we are still going through that process and working with all our clients at the time. We are a full service business bank. I offer lending anywhere from 10,000 to 750,000, and then my counterparts do the larger deals. So I'm dealing with the smaller, newer businesses. I offer Sba Financing on the 7A Express. And right now, for some of you that know, SBA, we're waiving all the fees. So no application fee, no annual fee, and no guarantee fee. So SBA is a great option right now for most of my clients. We also do traditional lines of credit, accounts receivable lending, term loans, and owner-occupied real estate as well. So we're here to help anyone that needs anything with any questions they may have. And thank you very much. Back to you.
Fantastic. Thanks, Renee. And I saved Rosalinda for last because they've had some changes. Well, not really some change. They've had some changes, but not changes at the same time. So I'll let her introduce herself and her new name.
Hi, everyone. My name is Rosalinda Delgado. I'm the Business Development Manager for Acción. Well, actually, it's Accessity, formerly known as Acción. We still have to say that we're formerly known as Acción, serving Southern California. So I don't know if many of you have heard those big news, but on April 1st, we rebranded our organization. So for the next 60 days, we're going to use the formerly known as Acción, but after that will be just Accessity. So we continue to be, we have a new logo, and I'm sorry I cannot change my background because I'm sharing the account with someone else, but I wish I had my new logo, our new logo behind me. So we continue to lend to small businesses. We also have a COVID relief loan. Actually, we participate as lenders with the California Rebuilding Fund. And we continue to do that for clients that have a revenue up to $250,000. We are still lending up to $100,000 from $300. Our interests are pretty much the same. We're still lending to startup businesses and growing businesses, and we have had actually a lot of requests for those type of loans. The approach that we're following right now is if they are an existing business, we look to see if they qualify for COVID relief, and we offer that program first. If they do not, we will definitely try to help them with our traditional program. We also are a community of support where we refer our clients to all the services that they might need, including credit resources, and refer them to the SBDC and all the resources available here in San Diego. We cover basically 4 counties: San Bernardino, Riverside, Imperial Valley, and San Diego. And we're here to help everyone, even though we focus in the low to moderate women-owned African-American and Hispanic clients. We lend to everyone. Thank you for having me.
Fantastic. And yes, I do like that you are now the formerly known, like I've said before, it's sort of like Prince when he's changed his name to a symbol. So so it's the same sort of thing. So that's how easy to remember. But yes, I appreciate you all coming in and talking. Of course, as we know, we're still kind of in the throes of a lot of the recovery, and many of you mentioned PPP. Of course, Accessity has some additional lending programs, and that's really kind of some of the stuff we're working on at SBDC, and is to really make sure that you're getting all the all the help that you need, because we know it's also very, very confusing because there's many different programs out there and so forth. So I'm going to have Allie drop into the chat a simple, linked on our website, which is sdivsbdc.org/COVID help. And you can sign up for a quick 30-minute appointment, kind of do an inventory of what you've got already from COVID assistance, and then see what else you're eligible for and can apply for. So Allie's dropping that in right now. So that's certainly something that we're absolutely working on. And so to kind of do that, I think some of you talked a little bit about some of the work you've done during COVID, with in particular with PPP and all of that lending. And truly that is fantastic and that type of work. But I think what I want to do is kind of, now that we know that the deadline probably will be, barring some horrible thing, which we, all fingers crossed and everything like that, our vaccination rates continue to go up and our case rates continue to go down, that we are going to be able to reopen, and people are going to start looking for some working capital and looking for some access to some lending. And so what are some of the things that your institution's thinking about, again, asking you to pull out your crystal ball, but what you're thinking about as you're looking at coming out of the pandemic? And why don't we go ahead and start with you, Renee?
Actually, our lending hasn't changed at all. So we've been I was just gonna say, this has been a really busy year for me. So we haven't changed anything in regard to lending due to COVID. We do have a COVID questionnaire. We do need to see that they didn't have significant drops. And that they have still been growing. So I was just going to say, I have been busy referring to formerly known as Axion and CDC, because the customers that have been affected by it, unfortunately, I have not been able to help them. But those that have had essential industry, target industries that have been doing really well, I've been able to help them with their expansion.
Awesome. And what about you, Fernando? What's primary funding looking at? I know, in terms of working capital and kind of the go forward here.
Yeah, very, very similar. I mean, as far as, we're sticking to what we do well, which is B2B industries with accounts receivable. I mean, that's really where our strength is. If you have AR and you're getting paid on terms and you need to speed up that cash flow cycle, we can come in and provide, financing based on those receivables. Or if you're getting some contracts and you have POs that you need to, that you want to leverage, we can also help on the front end there. One of the things we have been seeing a little more as well is just, a lot of companies are transitioning over to more of a e-commerce, direct to consumer, because they're just finding that, maybe the margins are, so much healthier, and maybe they've kind of figured out ways to make that pivot. So we've definitely been diving a little more into that space and trying to help with, just inventory on that end. But yeah, ultimately, the best fit for us is if you're in a B2B industry, there's probably a very good chance that we're going to be able to help you. And again, our criteria is really based more on who you're doing business with, not so much what the business has done over the past year or two. So that's a big, benefit that we can bring to the table, is that we're not looking at your historic financials. We're really just looking at what do you have going on right now. Is there a strong case to be made that, there's opportunity for you to grow now?
Fantastic. And what about you, Drew, and team there at Taycor? What are you thinking in terms of, as hopefully we're at the, seeing the light at the end of the tunnel here?
I think echoing, I think what Renee had said, we really haven't seen a change in our criteria too much. Some industries, being more the non-essential ones, were hit a little bit harder, but we've seen them come back even towards the end of the year and the first part of this year. Being a national lender, obviously certain parts of the country had been more accelerated, but with California coming back on board, we're seeing a lot more aggressive lending on our side. As Justin had mentioned, us being a hybrid lender, we have that flexibility to put things on our balance sheet or look to syndicate. So as a result, we're seeing growth in all areas. Obviously things coming back online, whether it's startup businesses or very well-established businesses. We've been very fortunate to be able to help extend capital to a lot of the businesses out there.
Awesome. And Janelle, you talked about how Chase has certainly, kind of put a pause on its lending for PPP. But what's Chase doing to prepare for, when June rolls around?
Right. Well, actually, we've reopened, so that's exciting news. Where April 1st, we're back to lending as usual. We've been able to get a handle on the PPP loans. So we're full steam ahead as of, April 1st. We look to see the picture and the story. So obviously we're looking to see how COVID has impacted you. We would have a questionnaire that we would go over with you. We'd want to see, where you were pre-COVID, what you were doing, during, the closures, if you had to close down, if you made any pivots, if you made any changes to the business to keep it going. And then we'd like to see, what you have in place going forward. So we are lending, some of my clients that I thought for sure would struggle, restaurants, they've been able to pivot successfully to take out online orders, things like that. So that's what we're looking for, is what you're able to overcome and accomplish during this time. We are doing all types of lending. We are a little hesitant, I guess you would say, on the startups at this point, just because they're a riskier loan. But we are doing, if you have a 1 year of tax returns, we're able to do, like the smaller lines of credit, term loans. Obviously the more higher limit loans, we're gonna ask for fuller packages. Right now on our commercial lending, on owner user properties, the rates are amazing. We're able to come in and really give you some great financing on that as well. So we're excited to be back in the game, so to speak, and help our business clients through more than just PPP right now.
Awesome. And Rosalinda, I know you've done some lending during this time, the traditional lending, but obviously a lot of COVID work. And so what's Accessity looking at, especially now that, as things start to reopen and especially people start looking at entrepreneurship? I'm sure that's a factor for you too.
Yes, we're basically, we are getting all sorts of requests. We are definitely looking at personal credit to see how that has been impacted. We're looking at the business plan, if they are a startup business, which we can fund as well. If they are growing, we're looking to see, what is it that they are doing and how is going to benefit them in the future. And of course, how they're being surviving this pandemic, and what are the how the business have changed, if they have in any way, and if they were closed, for how long they were closed, and that sort of thing. So we're looking at the past, and we are looking at, of course, at the future, and how they see themselves, especially, a lot of transportation businesses, they are very optimistic. Food businesses, very optimistic. We're still helping restaurants as well. So we're helping all sorts of businesses, as long as the owner has been able to keep their credit current. For the COVID relief program, they can have up to 10,000 in collections in the last 3 years, which has helped a lot of people that are not current. We also through one of our partners are offering this financial coaching, so they can get back their credit, they can get improve their credit as quick as possible, so we can fund them, and we have had a good success with that, actually.
Fantastic. And DeWitt, I know you have a crystal ball in there, so what are you seeing as things start to open up?
Yeah, thank you, Daniel. I'm super optimistic. And Pacific Premier, we never stopped lending throughout COVID. In fact, we've gotten more aggressive with our lending since last summer. And I guess I'm so optimistic right now because over the past couple months, the past quarter, I've probably seen more lines of credit requests, more term loan requests coming in than I've ever seen in my 8 years in banking, which is great because I think a lot of businesses right now are kind of gearing up and anticipating the demand or the surge in demand that we could see once the recovery, the reopening continues to progress and consumers continue to spend and come out of their quarantine bubbles and businesses reopening. So some of the recent success stories would be like a property management company that applied with me for a $250,000 line of credit when their current bank wouldn't offer them anything. and took a look at their financials, looked at their 2020 financials, looked at their year-to-date, looked at their 2019 tax return, and was able to get $250,000 approved in 48 hours. This was last Thursday they applied, Monday they were approved, and they're signing loan docs tomorrow. And that's really not that different from a lot of other clients' experiences. There's another company that also, it's a early stage manufacturing company that manufactures products on a subscription basis. They've only been around a couple years. They applied for $250,000 line of credit. Their current bank told them, no, you're not ready for a line of credit. They've also been approved for $250,000. So the types of companies I'm seeing a lot of lending coming from would be manufacturing companies, anything that is a company producing consumer goods, retail goods, professional service companies, investors, so anything real estate related. I'm seeing a lot of activity on the real estate side. And the things that I look for, or the things that are most important right now when I look at a new loan request, definitely 2020 performance, historical performance, so years 2018, 2019, and your 2021 year-to-date performance. That's it for me, Daniel. Thank you.
Fantastic. And Miriam, what's CDC Small Business Financing? I know you do a lot of working capital loans and also a lot of real estate loans too.
Yeah, so we did, round 1 and round 2 of the PPP loans, and then we did the California Rebuilding loan as well. And so we still have the COVID recovery loan at a 5% for 5 years. And then we have our impact loans and our SBA loans that go up to $250,000. And our underwriting has always been more, instead of rules or a ton of guidelines other than credit and if they cash flow, we're really just looking to see if it makes sense. So it's very much a one-on-one case by case. Typically, unless it's an acquisition, we're not asking that they have to have their 2020 taxes done. So if people were able to cash flow in 2019, a lot of those people are getting working capital, as long as it, like I said, it makes sense. So yeah, we're still doing a lot of loans. So I'm happy for that. And I'm also happy that, we're still offering startups and acquisitions. So somewhat of the same as usual, other than initially, crunching our credit score requirement, which actually went back to what it was before COVID. So it's still just a 620 requirement. And we still don't typically collateralize our loans. So yeah, we are doing a lot of real estate still. So our 504 loans. And then I'm actually finishing up for one of your centers, SBD centers, a 250 commercial property. So believe it or not, every now and then they find those little ones too. So yeah, we have the same promotion that I'm sure all the banks and Renee has, as far as in SBA right now, covering the first 3 months of principal and interest, and then also the fee, the guarantee fee, which is, can be pretty expensive, 2 to 3% of the loan amount. So it's a great time to apply for an SBA loan if you're a startup or if you're existing and you still need help with working capital. Like I said, I don't know how everyone else is looking at it, but we're not requiring most industries to give us a 2020 tax return. So yeah, we're doing as much lending as we can.
So I think Miriam hit on some important things there. So the SBA so I want you to repeat this, Miriam, because it's important. So what are some of these things? Because I know we've got a lot of SBA lenders on here. So this applies to, many, many lenders on here. So what is the SBA doing again for benefiting folks?
So SBA is paying for the first 3 months of principal and interest payments. So if you are approved for an SBA loan from February up till September of 2021, so approved, not funded, so you have a commitment letter from your bank or your lender, then you can take advantage of this promotion. And the other thing that they're doing is they are also covering your guarantee fee, which is typically 2 to 3% of your loan amount. So that can be pretty costly. So you're saving quite a bit. And, obviously if you can get this at a bank, if you qualify, that's always the best way to go. We're a good second option. I tell my clients, even though we're 6 to 8% on our SBA loans, if you do the math with the savings in those 3 months and those guarantee fees, our rate's pretty low, right? And we have a 10-year term. So yeah, it's I know a lot of people on this panel, bankers, that are also offering the same promotion. It's a great time to get an SBA loan.
Absolutely. And that's why I wanted to repeat it, because we've got quite a few SBA lenders on this particular call too. So Derek, we'll come back last to you and kind of you pulling out your crystal ball and how US Bank's looking kind of at the go forward as well.
Sure. Yeah, I mean, from our perspective, we've been open for business throughout the whole of COVID. So we do owner occupied properties. We also do investment properties. So within my space, I can do out of state deals as well. So we're present in 25 states, due to hopefully be 26 as we're expanding into Texas, hopefully before the end of this year. But certainly from our side, we can do conventional lending. To Miriam's point, obviously we do SBA lending, for acquisitions, not just for building purchases, partner buy-ins, partner buyouts. And, we do have an equipment finance team, a dedicated team that can also assist, with businesses that are looking to purchase equipment. We also have another group called a machine vendor services group. So we can actually get, it's a one-page application, and they can actually get it qualified up to $750,000, if they're buying large pieces of equipment. So, we typically have a 36 to 48 hour turnaround time on that. So, yeah, I mean, very much from our side, we're open for business, and we're happy to help, whenever an opportunity comes about.
Fantastic. So I want to transition to a little bit about, because obviously you all work and are very committed to helping small businesses succeed, and of course worked with hundreds, probably thousands of small businesses. And so what are 2 tips you could give small businesses, as they're seeking lending, as they're preparing themselves right now for this, and what they particularly could do? And we'll start with you, Fernando.
Yeah, absolutely. Thank you. One, obviously, I think just working with an advisor, someone that you trust, that's going to be able to help you. So the SBDC is going to be, the place I would start for that, and really have somebody that understands what lenders are looking for, right? Because as you can see, there's a great panel here today, and there's lots of options on where you're going to go to get funding. Everybody here has a little bit different niche. They're all great lenders, but they're going to have a little bit different take on how a set of financials looks, or based on their criteria or their lending policy. So the more prepared you are to go to a specific lender, or the better fit you can choose for that, for a lender that fits what you need, you're going to have a much higher chance of success, and you're not going to waste time and spin your wheels, going from place to place trying to figure out who's the best fit for you. So I think the number one thing is just working with somebody that you can trust, that can actually give you some guidance and help you to find the best lender. That's probably going to be the number one thing. The other thing is just know your business, know your story. I mean, a lot of times people come to me and they're like, well, this is a great idea, so I need money for you to help me with my great idea. And it might be a great idea. There's a lot of great ideas out there. So why are you different? Why do we take a chance on you? Well, it's because you have the data and the information to back it up. The business, the analytics behind it, tell me why your product is going to work really well, why you're going to beat the competition and all those things. So just really understand, more than just like, I have a great idea. That's great. But also understand what the difference maker is going to be for you. And that can go back again to working with the SBDC, them helping you, kind of create that story and making sure that you put the best foot forward and make the best first impression.
Fantastic. Thanks, Fernando. And why don't we go to you, Janelle? I know you've always got a couple of good tips.
I agree with what Fernando said, and obviously the SBDC is a good place to start. One of the main things that I find is clients don't know what they actually need or how much they want. And they'll ask me, well, how much do you think I should apply for? I don't know. I mean, I don't know your business. So when you're talking to a banker or a lender, you need to have a good idea of what it is you need, how much you're looking for, what your needs are and what you need the money for. The other thing is, I agree with Fernando again on having a good story, letting us know. So when I'm talking with the underwriter, I'm able to go to bat for you. So I need to understand everything about your business. And I also need you to be honest with me. If you have any delinquencies or issues that need to be addressed, I need to know up front, again, so that I can include it in my story to the underwriter. It's easier to get out in front of something. If you have a bankruptcy, what happened? What's the story behind it? I'm able to mitigate that explanation, as opposed to, I send the application in and the underwriter calls me and says, why do we, he didn't tell us, or she didn't tell us about this bankruptcy. So it goes to credibility. So I think, just be prepared, know what you want, and be completely upfront about any issues or concerns that we need to be aware of.
Fantastic. What about you, Drew and team at Taycor? You're on mute, Drew.
Justin, do you want to talk this one?
Yeah, absolutely. So a couple of things we've run into just recently, especially as the PPP2 round opened up. One thing we discovered is that business owners perhaps in 2020 got into a certain mindset about what they qualified for, what they didn't qualify for. Maybe they had previously applied for PPP and didn't qualify because they were a sole prop. But under PPP2, they might qualify fully. We had an opportunity recently for someone who previously had been declined a PPP as a small business owner because he was delinquent on a student loan that he wasn't even aware of from 12 years ago, and so didn't qualify. But PPP2 ignores student loan delinquencies, things like that. So there are nuances to what is available now versus what may have been available last year. So just because you had previously been told no, don't be afraid of that. And secondly, we've also run into situations with small business owners who were previously told yes, did qualify for a prior PPP or other emergency loan. Maybe they got a $15,000 disaster recovery loan last year and didn't realize that under PPP2, that is a qualifiable, forgivable loan now. You can fold your previous $15,000 emergency loan into a PPP2 loan and have it forgiven. So there's lots of nuances. What you thought you knew in 2020 may not be true in 2021. So again, even if you previously have had a conversation with a loan advisor at a specific lender or SBDC, have the conversations again, because there may be new opportunities that you just, were not aware of. And then finally, as we're thinking about the other piece of advice we like to give to our small business partners now is, as you are thinking about what happens in the rest of 2021 as the economy reopens, don't stay hyper-focused on one type of lending product or one lending opportunity. Access to capital is a very broad topic. And it could be that, you're a sole prop, now you do qualify for PPP, you have till May 31st to apply for that loan. But it might also be true that because of the industry you're in, it would be a really good time to do a straight up working capital loan, apply for a line of credit and have that available to you, or do an invoice factoring loan opportunity with the right lender. So again, the advice we like to give to small business owners and the type of consulting we're trying to do is to not think just about the loan application that came into us, but to try to think comprehensively about what that business owner is going to need over the next year or 2 years or 3 years in terms of access to capital, so that they can not only recover from COVID, but have the opportunity to use this recovery as a springboard into their next iteration and their next growth cycle.
Fantastic. Excellent points. What about you, Renee?
I'm going to chime in with some of the others. It is crucial that you are upfront with your lender, whether there's credit issue, financial issues, lawsuits, bankruptcy, because if we're upfront in our write-ups and tell the story and there's a good reason behind it, it looks much better than me coming back to you and saying, you just filed bankruptcy last year. So, the key is, your lender or your banker or relationship manager there is really there to help you. But when you tie one of their hands behind their back because they don't know the whole picture, it's harder to get approved. So, my key thing is tell the story, be very upfront, because we're going to run credit. We're going to see it. You know, some people still to this day think we're not going to ever find out about some of the issues, but please just be upfront with your lender and share the story with them and know your story. Because just like Janelle, I have people, oh, I want to qualify for the max. What is it? And then I needed to say the story. What are you looking to do? Are you looking to expand? Are you just having an emergency line of credit? Do you want to buy a piece of owner occupied real estate? So kind of at least have a good idea of what you want to do, because there's nothing worse than you're kind of just throwing something and seeing if it sticks. So we really want to be able to know the story and everything. So that would be mine. The other thing I want to share with customers, especially in my world at Comerica Bank, PPP lending, or if they've gotten, you know, 1.0 and 2.0, does not affect them qualifying for a working capital line of credit. The EDIL might be another issue, depending on how much they got and what their situation is, but PPP is not affecting their approval issue at Comerica Bank. So I had customers, well, I didn't want to apply because I took PPP, or, I'm going to take PPP. In my world, it does not affect lines of credit or working capital term loans. So just keep that in mind and don't be scared. Reach out to all of us because we are here to help and we can tell you what we can and can't do. So back to you, Daniel.
No, that's fantastic as well. Kind of understanding how the disaster assistance impacts things and what does and doesn't, and especially the non-impact of PPP, especially the way in which it's handled. What about you, DeWitt? What are a couple of tips you've got?
So I think for me, it really comes down to three things: full transparency, knowing your financials, and knowing what you need. And the full transparency, I mean, that kind of goes without saying. If you apply for a loan and you don't disclose something that the bank or your lender feels like you probably should have disclosed, that's just going to start the relationship on the wrong foot. So get everything out in the open, any issues, bankruptcies, losses, anything like that. Get it all out in the open so that the lender or the bank can work through it. Knowing your financials, when folks call me over the phone and ask me, what can you do for me? Do I qualify for this line of credit? I'll usually get right to it and try to give them a quick answer. But the first things I'm going to ask them are, okay, well, what was your net income for 2020? What was your revenue for 2020? What's your net income currently? And if I ever get the response, well, I don't know, let me get back to you on that. It makes me kind of ask myself, well, am I speaking with the business owner or someone else? Because if you're the business owner, you probably should know how much money you made last year, especially if you're calling the bank asking them, what can you do for me? So know your financials, know your revenue for the prior year, your year-to-date revenue, your net income for the prior year, year-to-date net income. Knowing what you need, this one, it's another one just like full transparency. When I get calls from business owners that start off, well, I own a business and I want a line of credit. So what can you do for me? Well, I can ask a couple questions, but if you tell me what you actually need, I need a line of credit for $250,000 because I've got all of this AR from selling all of these widgets, and I get paid on all of these widgets in 30 to 60 days. But I really need this line of credit to help me grow, hire more people, do this, do that. That's a more complete story to me that really helps me understand what the use of this line of credit is going to be, as opposed to, I own a business, what's the largest line of credit you can possibly give me? And then the last thing I would say is speak with the SBDC, ask them which banks might be the best banks to handle this loan or this line of credit that I'm looking for. And certainly also go over your financials with the SBDC before you apply. Because once you speak with me, speak with another lender, speak with the bank, as soon as you email me your financials, if they don't look good, that reflects poorly on the business. So I would say speak with the SBDC first, share your financials with them first, see if there's anything that could be improved upon, cleaned up, even if it's just in the general appearance of them, because your financials, the quality of those financials are absolutely a reflection of the business. So speak with the SBDC first, find out which bank or banks or lenders would be the best fit for you, get all of your cards in the open, be fully transparent, and know your financials.
Fantastic. And Miriam, what about you? What are a couple of tips?
Well, everybody said my good tips, which, honestly, this is a really great panel and we all work together. I don't remember if it was Renee who mentioned, and then Tariq mentioned we all work together. If I find something that we can't do at CDC, I'll send it to Tariq or Renee or Janelle, and they do the same with me. So this is a really great group of people. Fernando and I also work together. We all work together. And I work together with SBDC all the time. I love, the guys over there, Sean, Joel. I mean, all of your people are awesome, Danny. And I can just tell you so many stories where, a client comes to me and is just not going to happen. And then I send them to Sean or something. And literally Sean is like a hammer. 6 months later, he brings them back and credit is where it needs to be. And just the client is approvable and fundable. So, I mean, I love them working with you. I'm just going to echo what everybody kind of said. Like I said, we all, care about you. And if we can't help you, I'm sure, someone here can help you. And if someone here can't help you, I mean, hopefully you already talked to SBDC, but if you haven't, they have a whole lot of people that might be able to help you. But I mean, just some of the things to echo what everybody said is, one, work with SBDC because they can save you a lot of time. You don't want to run your credit with everybody. I had a client that came from a loan broker that literally had 22 credit inquiries. Believe it or not, we were able to help them, but that was not necessary. That was not necessary. So connect with the people that because we all are looking out for you. And that's my first advice. My second advice is definitely know how much money you want, and what you want it for. Like the one thing that just, I'm sure everyone here is like, especially bankers, makes you feel uneasy is when you say, okay, how much money are you looking for? What loan amount are you looking for? And the client says, what's your max? That's what I want. What do you need it for? Well, they don't have an answer. And so it's like, no, whatever it is that you need, you don't need to, speak our lingo like working capital, but you can explain, hey, I need to hire somebody, or, hey, I want to grow my business, or, hey, COVID has really affected me and I just need to try to survive. Whatever it is, just be honest about what it is that you need and be prepared. So, don't forget to tell us that you have, I had a client that I was right about to pull the credit, and then she decided to call me and let me know that she currently has an open bankruptcy. I was like, oh, okay, you just wasted 3 weeks in putting your loan package together, not necessary. So there are lenders that will help you even just a few days after a bankruptcy. So yeah, just be honest, work with SBDC and know what you need and what you need it for before you speak to one of us. It just will save you so much more time.
Fantastic. And Rosalinda.
Well, I have two additional tips. One, if you are starting a brand new business, it's a startup business, make sure you have another source of income. That's the only way we can help you. If there is no consistent, steady source of income, it's going to be impossible to help. Now, if we have seen a lot of people that just lost their job and they want to start a business because they don't want to rely on a job, but they have no income. So another way to have this other source of income could be with a spouse. If you bring a spouse that have a strong, steady source of income, we might be able to do the deal, but there has to be someone on the loan with income, because at the end of the day, for you to be approved, you need to show that you have the capacity to make the payments, because the loan has to be paid. You have to start making the payment within 30 to 45 days, and the business might not be producing by then, depending on what type of business. The other tip that I have is, if you have a partner in the business, be aware that everyone that owns 20% or more of the business need to be on the loan. We get people saying, yes, I'm going to start a business, or I have this business, and but the loan is going to be on my wife's name. That cannot happen. So if your name is on the business, you have to be on the loan. If you are the key person on the business, you need to be on the loan. So it's not whatever you want to be on the loan. everyone who owns the business, who owns 20% or more, need to be on the loan. So that's very important that people understand that. We cannot pick and choose to see who is the loan, is in what name the loan is going to be on. But I echo all the other recommendations of my colleagues here. As Miriam said, we all work together. If your bank cannot help you, we might be able to. Sometimes, we require collateral for any loans over 50,000. Sometimes the people don't have the collateral we require. In that case, I will have to send them to Miriam of any other lenders, because that is a requirement from us. However, Miriam might have a deal that is too small for her, and she might refer them to me, or they might have challenges on their credit that she cannot overcome. I might send them to me. But I definitely echo everyone's recommendation of going to the SBDC. The SBDC knows all of these programs, and they can guide you better than any other lender, because you need to be prepared. Preparation is key, because like a lot of my colleagues said today, you need to give a good impression, and the SBDC is going to help you, portray yourself as a business owner that knows what is going on in your business. So definitely talk to your SBDC advisor and before you talk to your lender.
Fantastic. And thanks for all for giving the shout out. I don't have to explain what we do. So that's what's good is, certainly what I want to iterate is a couple of quick things. Is number one, I think everyone said the same thing about being honest and being transparent. I think that is the top of the list. I think as so many times, as we keep talking about the federal programs and we get questions, about this program or that program. Well, how do I answer that? My answer back to them is honestly. And you just answer the question. And, and I think that's what's so critical, is being upfront and transparent. And number two is, of course, we're here to kind of be able to help you and be able to put that information together. But three, I think is most important is you see here that the small business team here in San Diego and Imperial are really here for you, the small business owner. They want to see small businesses be able to succeed and to be able to wrap up. So as we're coming down here towards the end, I just want to wrap up and thank everybody for being on today. I want to thank our sponsors of our regular Connecting with Capital, which is Home Street Bank, Main Street Launch, CDC Small Business Finance, Marble Bridge Funding, Lenspark, and Primary Funding. And certainly want to thank our panel today, Renee Hinton from Comerica, Rosalinda Delgado from Accessity, formerly known as Accion, Fernando Ponce from Primary Funding, the whole Taycor team, Drew, Emilio, and Justin, Janelle Shalou from Chase, Taycor Hadi from US Bank, Miriam Baltas from CDC Small Business Finance, and Dudley from Pacific Premier. So appreciate all of you for being on today. We really appreciate all the hard work, and thanks to everybody. And I think everyone did have a chance to drop their contact information in here. And of course, we'll be posting a recording of this on our YouTube page and emailing it out. So thank you all, and have a fantastic weekend.
Thank you.
Thank you for having us.
Bye.
Thank you.
Thank you.
Thank you.
Thank you so much.
Thank you, everybody.